Canada with the live hangout, the art of speculation during Civil War. Sun Tzu meets Jesse Livermore, and this will be a little different if it works correctly. But the intention is to protect the identity of Arthur Fix, the author of Sun Tzu meets Jesse Livermore. That's his nom de plume. And he wishes to remain anonymous. So we're going to bring him in. He's in Europe. He's an elderly gentleman. And we've got a bunch of questions for him. And we're going to bring him in by telephone. And hopefully that will show up, or you'll be able to hear it on this recording. So just bear with me. I'm going to use my iPad here. And uh-oh. So we're just getting ready to start here. Just give me another minute. I'm going to bring in Arthur Fixed. We have a number for him. He's in the Baltic region of Europe. Should have had this ready ahead of time. But just bear with me one moment here. I can see that we've got no viewers. We haven't done much promotion on this. We're still practicing, you might say. Let's see. All right. All right. How do I created a group. Yeah, this is a disaster here. So we'll just try making a phone call. What am I doing wrong? All right. Sorry for the delay, folks, if you're watching this. And Google Hangouts just records everything. There's nothing you can do. It's just the way it works. All right. All right, well, we are live. This is Google Hangout, even though there's no one joining us at this moment. Hello, Mr. Fixed, Arthur Fixed, Saren Day calling from Canada. How are you today?
I am fine, sir, and you?
Oh, really well. Okay, we have started a Google Hangout on this end, and I'm using my iPad, so hopefully this will pick up on the microphone here. So we have a bunch of questions, and I really want to thank you for taking the time to meet with us and help us to understand the art of speculation during Civil War. We love your book, by the way, so we wanted to take this opportunity to ask you some questions about your own background and what you can see in the future for an opportunity to make a profit on speculating.
Well, I'm always happy to speak with you, Aaron, and to be in any way associated with the work that you're doing with offshore investments, on the grid and off. And so please, fire away, ask the question.
All right. Well, we'll keep this fairly brief too, and this was, as you knew, this is a bit of a rehearsal as well. We're still learning how to use Google Hangouts, and this way is quite uncommon, I'm sure, to have someone coming in on a telephone instead of through the video. But I respect that you want to retain your anonymous stance that you have there. So we want to jump straight into some questions, and especially to start out with what your view on gold is as an investment. It's really kind of a debatable topic. So many people have different opinions about gold. I'd like to hear what your thoughts are on gold as an investment today.
Okay, well, I don't think gold is an investment. I think gold is a currency. And as a currency, you have to make a determination of whether it's a strong or a weak currency relative to other currencies that are available, primarily the US dollar, the euro, the Swiss franc, the British pound, the Japanese yen, the Chinese yuan, and so forth and so on. So I think it's a mix. You have to take a look at that, and then you have to take a look at both the short term on the speculative side on what the market swings are and what you think might be in terms of a fundamental valuation. There's two ways of looking at it. So I think on the fundamental evaluation, it's the only currency that isn't somebody else's debt. So it's by far the safest currency. It's the only one that's been around for more than 500 years or 300 years or 200 years, I think. It's been around for 5,000 and more. So I think it certainly has a place as a currency in every person's financial portfolio.
And how about as a method to speculate, though? What are your thoughts?
On the speculative side, it's one of the best vehicles for speculation, either on long or short. I don't do the short side on the gold or the gold shares myself, because being long on either of those or the bullion itself is being short paper currencies and central bank policy, which is a lot easier to predict than the opposite.
And I just want a 40,000 foot view of your strategy with options, especially as it relates to gold and gold mining shares. How would you put an option on gold mining shares, or gold for that matter? And what instrument in gold would you use?
Well, it would depend on the client's position. If the client is looking strictly for saving capital, then by far the safest way is to buy the bullion directly and store it outside the existing banking system, because the existing banking system, as we all know, I'm sure, is questionable at best. And there's a certain amount of risk in it that the only effective way you can eliminate is by taking possession of the bullion itself and storing it outside of the banking system. So that's for the conservative capital preservation investor. I don't have a lot of that. I had some of that myself, along with real estate as kind of a core portfolio that handles that particular issue. It's much more interesting, both gold and the gold shares, much more interesting on a speculative side on the bull market when they're going up. And the basic scenario that you have to understand and consider is that the gold mining shares have a volatility about 3 times that of gold. In other words, if gold goes up 10%, the shares will go up 30%.
Interesting.
Yeah, and then there are options on the gold mining shares, both as indexes and as individual stocks that are widely traded on the exchanges in the United States and elsewhere, that are fairly easy to get in and out of. In other words, they have very good liquidity, a lot of activity, and there you get another leverage up of 10 times. In other words, the auction will be 10 times as volatile as the shares. So if the shares go up 30%, the option can go up 300%.
So they're 3 times more volatile.
Oh, it's 10 times. 10 times. The option in the middle is 10 times. It can be 20 times, it can be 5 times. It depends on the option that you buy.
Okay, I had the feeling, well, it's really interesting when you're talking about going long, because I had the feeling that most of, and by the way, just to clear this up, what percentage of your trades are on behalf of clients and what are on behalf of yourself? Are you mostly managing money of other people's? I noticed that you do have an investment advisory service. So I'm just curious, is most of your decisions made for your own trades or on the behalf of the money that you manage?
Well, I don't manage anybody else's money. I give financial advice, but the clients I have hold the currency in their cash and their positions through their own bank or brokerage firm, and I simply give the calls on when to buy, what to buy, when to sell, and what to sell. In other words, I don't have custody and I don't do the trading. I do the calls and then the client is responsible for doing the trading. This way, the client has maximum comfort level in keeping the funds under his own control and the securities and positions in his own control or her control.
Sure.
And with the least amount of question about any facility that I would use. So also this prevents me from having to register as an investment advisor in most jurisdictions.
Okay, fair enough, sure.
So I can give the investment advice without having to be registered in almost all jurisdictions, as long as I don't have custody or do the actual trading itself.
Sure.
That's the reason I do it.
Yes, actually, we're familiar with that model. We were promoting a currency trader last year, and he was the same thing. It would be your account, your money. He had no way to access it, and he was just selling information. But that information was based on an algorithm that he had for trading. Anyhow, that's another matter. But I just wanted to go back to this. So you're talking going long on gold, but you know, the title of your book is Sun Tzu meets Jesse Livermore. And Jesse Livermore, we understand, and I've studied him a little bit now, made his massive wealth, you know, probably historically the largest trade. Maybe George Soros beat him, I'm not sure. But from what I understand, he's kind of like a world record holder for the most successful short trading. And I sort of was under the understanding that a lot of your style was about picking a bottom in gold and going short. Maybe you care to elaborate on that a little bit.
Well, yes, picking the bottom in the gold market is something that I've had some experience with successfully. Both in 2012, I nailed it to the day, and earlier in '87 and 79 and 80 and 2000 and also 2004, we had a number of successful calls. And when you're long gold or the gold shares, gold options on the shares, you're basically short the paper currencies and fiat currencies and central bank intervention in the free market. And the basic theme of the book is how to make profits from the result of governmental intervention in the free market economy, because the rules of and the laws of economics don't change in any way because of government intervention. It's just you get a different result.
Sure.
You can predict the result 100% of the time from all government intervention, except for the timing, because the timing is both the result of the government intervention and investors' reaction to government intervention. And the investors' reaction to government intervention is entirely a subjective matter that can turn on a dime and is much more difficult to prognosticate than the result of the intervention. I mean, when you have, for instance, when you have government intervention in the free market for money, and you have increasing the monetary unit, the number of monetary units are out there, if you analyze it very carefully, you can see that the one and only effect of that is that you steal the purchasing power of existing monetary units. Now, this may or may not cause the inflation rate for consumer prices to go up or down, but it definitely decreases the purchasing power that you'd otherwise have because you just have more monetary units.
Sure.
Now, when that shows up, now so you know that your monetary units may be worth less. That's absolutely true. Now, when that shows up in prices for real estate or gold or silver or commodities or stocks, it's a different issue because the additional liquidity that you have from increasing monetary units that's now given to the people that are politically connected to the process of increasing monetary units is something that doesn't go in a straight line, nor should it.
Well, for sure.
Like all rivers and some business people taking a least course of resistance winds up in all rivers of some business people.
Yeah, fair enough.
Of course.
Right. And so what are your feelings on a government intervention in a currency, or as we hear this term bandied around, is a currency reset? What are your thoughts on there being something in the future like a currency reset?
Oh, well, the currency reset occurs all the time. Now, from 2000, when gold hit in U.S. dollar terms 252, it's now what, at 1100?
Yeah.
Plus, I mean, you've had more than a 500% reset over the last 15 years.
Sure.
So I mean, it happens all the time. And since you have a floating price on gold versus fiat currencies, the reset happens all the time. I think the reset that people are looking for is the reset that you're going to have if the exchange rate with the dollar with the yuan, or yuan with the yuan, or the EU, the euro changes. And there's been discussion about making the U.S. dollars that are out there without a home. It's making them in some way less valuable through some kind of a reset. I think that's unlikely. It's unnecessary. It's not to the advantage of the powers that be. I think the most likely long-term thing that is going to occur in terms of a reset is that the existing central bank system is going to adopt gold as part of the currency mix.
Or in the basket, as they say.
Yeah, and use that as a way of continuing the inflation game. In other words, if you can pay off your existing debts with 100 to 1 or 1,000 to 1 reset and the issuance of a new, say, gold-backed dollar, for instance, just theoretically, I'm not predicting that it's going to happen, but theoretically, if it happens, that you basically can depreciate your government debt down by 100 times or 1,000 times. And that way, if you make it convertible, the currency convertible, it becomes a desirable currency, and the existing power structure gets stay in power. So that's much more likely to occur than something else, in my view.
Okay.
That's a long-term view.
Fair enough.
It doesn't say anything about what's going to happen next week, next month, or even next year.
Sure. Well, that's where we want to get to, is your predictions on the future. But before we go to that, can you share a little bit about silver? Yesterday, I made a video where we discussed that it sounds crazy, but it was Sir Isaac Newton who was instrumental in setting the pound sterling way back when as the British currency. And it was based on gold at 16 to 1 is what Sir Isaac Newton put it. And then for years we had heard the 10 to 1 analogy, but it's way beneath that now. And just tell us your thoughts on silver. And do you see that there might be a bigger opportunity in speculating silver against, rather than gold?
So I think silver has been called the poor man's gold. I like the affirmation that it's gold on steroids. It's much more volatile than gold, both up and down as a percentage. I think there's some historical information about silver that's useful to remember, and that is that silver has been, as a practical matter, more used as money in coin form than gold has.
Yes, I've read that too.
Yeah, the best example of that in recent history is the British Empire during the time of the Raj in India. India has become became the largest holder of silver because the British Empire, in order to get people to actually have faith in the currency, made it convertible to silver.
Yes.
Into silver coins. And that was the predominant currency that was used in India and what is now Pakistan for many, many generations.
Sure, fair enough.
So, and also there are many commercial usages for silver, many more so than for gold. And I think also as a product of how much it is consumed, it's much more so.
Sure.
Silver than it is for gold.
I was going to add that it's actually got an industrial demand that outpaces its production. And I'm calling you from Western Canada, where we're famous for our silver mines and our gold mines. And now the cost of silver, it costs more to get it out of the ground than the market value of it, which is really sad for all these people that are out there working.
Most of the silver production is a byproduct of the mining for copper and for gold.
Well, precisely, yeah.
Silver and so on. Very little of the production actually occurs from silver mines, but there is some, and those companies are also very volatile. There is an ETF one can buy on that also. There's ETFs on just about everything now.
Yeah, it's amazing how many ETFs, and they're inverse ETFs. which are really, I also, we published a story on Invest Offshore about all the inverse ETFs. But let's go back to silver and gold. Would you use the same strategies on those two? Or just give us a sort of an overview of how you would place an option on either one of the two, or what would be the difference of how you would go about it?
Well, I think the process would be the same. I want some diversification. In other words, I wouldn't want to put all of the bet on one stock. So I would use an ETF or an index and take a few of the leading stocks to put an option on. And I would tend to, at least initially, put it in 3 different increments of 3 months out, 6 months out, and 9 months out. And you're going to get more of a leverage on the earlier, the 3 and the 6, than you will for the 9 months.
Sure.
But it gives you some diversification. I'd have at least three positions, 3 stocks and 3 ETFs, which I would do that in, just so I get a market call rather than, because if you do it just on one mining company, you have a price change based not on market for the metal. And what we're betting on here is the market price of precious metal versus currency. It's a currency speculative play, and
I see. Okay.
Yeah, it's not an investment activity. You shouldn't think about it in terms of investment activity. This is simply on a fundamental basis. It is a bet that the market will reflect the intervention in the market by governmental entities, and you're going to have certain results from that. Okay. And on the timing, there you have a whole different set of questions and answers and procedures to go through in terms of determining when the correct time or the best time is for making your bets, placing your
I like that you use bets. And, in an effort to keep this rather brief today, because as you know, I wanted to put this up, keep it short, let people watch it because it will go to YouTube, and then plan some more of these discussions in the future. And we can even be much more specific in the future. But before we wrap this up today, there were 2 things. I wanted you to talk a little bit about Jesse Livermore and what he did that was so phenomenal back in 1929, and I guess there were some others. But then also I want you to share what you did. And from what I've read, there have been 3 times when you've really picked the bottom and you really had your bet in place. And tell us a little bit. First, tell us about Livermore, and then tell us about what you did.
Okay, well, with Jesse Livermore, I'd like to clear up 2 things. Number one, contrary to some reports, he did not die broke. He died after having 3 families and 3 wives. The last wife was also the 4th husband, and the 3 previous husbands of this 3rd wife also allegedly committed suicide. So rather suspicious on the face of it.
Yeah.
Also,
she had, I'll straighten that up. She had 4 prior husbands who had committed suicide. So Jesse Livermore's 3rd wife was a widowmaker.
Yeah. Well, so that on the face of it's kind of suspicious. And the other thing is that short sellers are basically free-riding the inside promoters that are running Wall Street. And the stock market is designed to fool most of the people most of the time to the benefit of the insiders. And there's some expense in promoting stocks, And if you're a short seller with good information, then you're getting the price going down without having to pay for any of the promotion of the stock going up.
Sure.
So you'd be able to do the short. So they're hated, and there's two very suspicious people that groups that had some reason to do him in. And he did not die broke. He died tax-free. In other words, there was nothing to tax on the estate because he planned everything with trusts, which were perfectly legal at the time, to avoid all of your income tax and estate tax liabilities.
However, he did have a couple really bad losing trades before his demise, from what I understand.
Well, yeah, he had some bad trades, and he had good trades too. But there'd be absolutely no reason for him to commit suicide because he was poor. He was not even worth many millions from where his family was. His family's lived quite well since then.
Interesting.
Yeah. He's most famous for making $100 million during the 1929 crash.
Sure, right. And what was that speculation mostly?
Well, the speculation was the same as our analysis, my analysis. It was an analysis of government intervention in free market and making this easy money available. 10-to-1 leverage on stock options, basically wound up with margin. You can put 10% down, and the bank can finance 90% of your purchase on the stock. And then there was a deliberate policy to pull that out, which he was aware of. So he positioned himself ahead of the time to have the most speculative stocks. He was short a lot of stocks, and he didn't start off with shorting as many and as large as he could have. He did what is called pyramiding. That is, he used profits on initial short sale to put on more short sales.
I've never heard that expression before.
It's called pyramiding. And I did basically the same thing back in 1979 and 80. Which was actually my first major commodities short sale speculation. And it didn't start off that way. It started off with one of my employees who was a gold bug, decided that he wanted to get paid $2 grand per period of payment. And I said, well, that's fine, but I want to protect myself in the marketplace. So how do I hedge that? So I said, well, I can buy an option on gold or on futures contract gold. So I opened up a commodities account, put in $20,000, and started speculating in the gold market. And I did a little more speculation than I needed to for my employee. And in 6 months, I royally turned 20,000 into 10,000.
Reverse.
Yeah, well, then in December, excuse me one second, that's what it is, what they call it.
Yeah.
Yeah. It's a fascination. No, I had, in the early part of December of 1979, I had 10,000 in the account. And at that point, I could buy 10 contracts. So I had 2 advisors that I was working with, one of which was always right and the other which was always wrong. And so I did the opposite of the one who was always wrong and did what I did correctly, the one that was right. And I called it correctly. And then you had the market went up for something like 350 to 375 to something like 850, all in about 45 days. And I went down to the Caribbean. I had my whole family fly down, and my wife's family fly down in a private jet, and spent the time in the house I had down there, and the bank I was running at the time. Worked with, had a good time, and every other day I'd call up my commodity broker, and the price was going up. I said, buy some more, buy some more, buy some more. I wound up with $1.3 million in 45 days on 10,000.
Wow.
And that was a lot of money back then. lot of money back then. I paid off all my debts and bought a nice big farm and house for my dad, and had a lot of money left over. And I discussed the matter with my financial advisors going home. Led me to understand that the gold shares, the market in the gold shares hadn't yet had its normal uptake along with gold. And I would expect after the first crash, you'd have a B-leg up that would try to go up to test the previous highs. So I said, well, that sounds good. Let me take a speculation on 250,000 on this, and I'll put that in there, and then I'll do it on the gold options. I'll do options on the shares, and I did the same sort of pyramiding that is used profits on the first investment to more the same investment. And in 6 months, I turned 250,000 into 4.5 million.
Wow.
So 4.5 million plus the first million, so 5.5 million. Originally 20,000, but started off with 10,000 when I started actually working on it. And you can get that kind of leverage on the options on the gold shares, and that kind of return if you pyramid.
I see.
And it's very dangerous to do that, except when you're on the right side of the bull market. And then it's really actually not dangerous at all. And the only major thing that you have to call now, or that I need to call now, is when you have the turn in the market, when you have the low in the market. Because when you have a low in the market this time around, you're going to have a bull market in precious metals that will last at least 3 to 5 years.
Right. Yeah, for sure.
There'll be plenty of opportunities to highly leverage up and pyramid.
Okay, well, here comes the $64,000 question. When do you see the bottom in gold?
Well, I think there's substantially better than an 80% probability that it'll be this year.
Okay.
I think there's a 50-50 probability that it'll be either in August or in October. And I'm not sure whether August is just slightly closer to being the preferred guess than October, but it would be strictly a guess on my part. And I don't make predictions. What I will do is say what the probabilities are, because this is a bet.
Yes, fair enough. No, I can appreciate that, and I concur with you.
You're looking at the odds. So what are the odds of it happening this year? It's, in my view, it's 80%. So it's 8 to 2 in favor of it happening this year. What are the odds of it happening in October or in August? Maybe a little more so in August and October, but it's fairly close to either one of those two.
Okay.
I would want to give a lot of big preference one over the other.
Even money.
However, I think that there are a number of patterns and ways in which the bottom could flush out. And if it does in one of those patterns that I see as a possibility, then it may be a situation where it's like 97% sure that that's the bottom. I don't know that that's the case. That certainly isn't the case today. And I don't know whether it's going to happen in either August or October that will be the case. I'll be able to say. But there is a possibility now. I can say that if it happens in a certain way when I call it, there's a possibility that I could make a call that I would consider to be a 97% call. I consider that to be the case in the low that I call with the assistance of another party. low than calling the top of that, because the other party that I worked with said that the top was not, it was just a bear market rally, and he was right. I wasn't sure whether that was the case or not. So my history of making that particular call, I want to emphasize, number one, I did call the bottom of the day, but I did not call the top correctly. And at this point, I'm not the only one that's working on this call. There are two other people, and I think between the three of us, it may be that we'll have a very sure call. If we do, I'll state that to the people that are our clients.
Okay, excellent. Well, we'd like to have you come back in. We'd like to have you come back in July and invite a larger audience. And once this goes to video, want to wrap it up here soon so that it doesn't become too long for people to watch and to be able to take away some valuable information and insights. For our listeners, I wanted to say one last time about the book, and I wish that I had a way to show the cover of the book, which is available on Amazon, and it's called The Art of Speculation During Civil War. Sun Tzu meets Jesse Livermore. And that, you can find the links to it on Invest Offshore, and there's quite a bit. Mr. Fixed, which is his nom de plume, has been very gracious to allow us to publish some of the content from the book. So if you go to investoffshore.com onto the blog, I think we've got at least 6 or 7 different articles, and we're going to keep adding to that. And we'd like to have the author back in July so we can revisit this subject, and maybe we'll have some more specific questions that we can look at the mechanics of setting up these trades, because we didn't get too much into that today, although you did, tell us how you did it, but we'd like to look more carefully at the mechanics and more specifically. But I really want to thank you for taking the time. I know you're in Europe, so it's already into the evening there, and want to thank you again for all this great information, and I'll share this with as many people as we can, because I think you're right on the money with the 80% likelihood, and I also agree with you that August, it could be the month of the bottom for gold. That's my gut feel, but we should have facts and information, not gut. Is there anything that you'd like to add as in a closing here?
Well, Aaron, thank you very much for inviting me, and I look forward to our next conversation.
Absolutely. Thank you very much. Arthur Fixed, everybody, the author of The Art of Speculation During Civil War, Sun Tzu meets Jesse Livermore. Thank you, and we will have you back in July and continue to publish more of your information. But anyone, investoffshore.com, you can find the links to the book on Amazon. That's it. Join us again soon. Thank you for watching.